Jane, you mentioned briefly the euro. I want to certainly dwell on your thoughts on the euro now. How much downside to the euro is there based around COVID-19 this winter, do you think?
Well, to be honest, I think there's probably a fair amount of news in the price. I think it can still go further lower, but I think the market has priced in a fair amount, particularly over the recent days. I mean, if we look at euro-dollar particularly, when we broke below that 115 level, we really did see the downside really beginning to accelerate. So I think in the last week or two, we've seen a lot of that bad news coming through. But, of course, what we don't know is how much worse the restrictions are going to get with respect to COVID-19 in Europe over the next few weeks, perhaps this side of Christmas, and I think that is going to really determine whether or not we really need to price in more bad news or whether we can remain stable. Now, we do have an ECB meeting coming up in December. That is always going to be an important meeting, and speculation is beginning to emerge that will the ECB, as indicated previously, be able to let its emergency pandemic programme elapse in March, or will that really throw the timetable out of the water? So I think that's the news the market's got to get to grips with in the next few days.
Jane, you talk about that ECB meeting, but do you think it can really buy the currency? I understand and appreciate the idea that a lot of the bad news in COVID is probably in the currency now. But what's the catalyst for buying the euro here? Like, why, as an investor, would you look to go long the euro? And I'm not just talking about euro-dollar. I'm talking about euro against any other currency.
Well, I'm no particular fan of the euros, and I think this is probably what many investors are trying to gauge. I mean, if we look back a year ago, the market was very long the euro, and it wanted to carry on being long the euro well into this year. So what we've seen really since the second half of this year, since around about June, is a real capitulation in a lot of those euro longs, and the market really coming down now to a negative position. Now, I think if we want to begin to see that the market pulling up those long positions again, we've got to see those signs of growth. And I think we've got to focus on the German economy. We've got to perhaps even focus on the Chinese economy, given that Germany's big export partner is China. So we need to look for signs of growth and signs of recovery. And as you sort of imply right now, there's not a lot of those.
Jane, has anything you've heard from the Bank of England over the weekend changed your view at all about what happens in December? It seems that the meeting's still live, but a lot of commentary coming from the Bank of England over the weekend or on Friday and in the Sunday papers.
That's right. It's quite surprising in a way that we saw Bailey over the weekend really beginning to hedge his bets. Now, that, of course, contrasts with the remarks he made on a Sunday a month or so ago, which really did sound very hawkish and really wrong-footed the market a month ago, leading the market to anticipate that in November there would be that interest rate hike that didn't come. So this time he's been a little bit more cautious, a little bit more pragmatic. But even so, if we look back at last week's UK data, if we look at the CPI data and the employment data, it does look as if there is a strong case for the Bank of England hawks to really push through with a 15 basis points interest rate move as soon as December.
So can I take that to mean that you think the hike will be coming in December? And if so, how much will pound move on it?
Well, again, we come back to the fact that a lot is already in the price. So, again, we've seen sterling move quite a lot over the course of the last week or so. So a 15 basis points move, if that is what we get in December, really shouldn't move the market that much. We might even get a sell on the fact type of reaction. And I think whether or not we get a sell in the fact reaction in December, if we do get that hike, really does depend on the guidance. Is the market overpricing the amount of interest rate hikes from the Bank of England in 2022? Well, quite possibly. And if the guidance begins to push back a little bit on that, or if the economic data begins to push back on some of that, well sterling could lose a little bit of ground into the end of the year, even if they do hike interest rates.